Let's take a quick check on the Forex markets and see what the markets are currently doing. Euro dollar, bring that up on your screen for you. 127.38 is where we're at. A little bit of weakness being shown by the euro there. Of course, dollar yen trade, there you have it, 85.40. We're getting reports out right now that the Japanese Economic Cabinet is to meet between 8:10 GMT, between 8:10 and 8:30 GMT. That's according to Kyoto. Of course, we'll have to wait and see what happens and what they announce on that. And that's going to make that trade change a little bit, of course. Let's bring in Chairwoman Keen. She is Head of Forex Strategy in Emerging Asia at RBS. She joins us live on set, together with our guest host, of course, Jim Rogers. Thanks very much for joining us. Keen, it's interesting when you watch the reaction of the markets, because no matter what happens, you're going to find that the ECB and the Fed are completely on different tracks. The voices we heard out of Jackson Hole were also completely different in the notes. What are you expecting in terms of the euro dollar when we go forward into this week?
I think, considering what the Fed has done, which is to delay the exit of the QE program, and now the BOJ has extended the short-end liquidity operations, it looks like of the three, euro is going to be by default the strongest of the three currencies. So I'm looking for more upside on euro dollar, certainly.
Jim, what do you make of where the euro is at right now? Because again, a lot of folks have been concerned about the euro and the reactions we've been getting. It's almost like we don't care about Europe's peripheral problems anymore. We're only focused on the U.S. Now.
Well, you should. If you only focus on the U.S., you do so at your peril, because the world is a very interconnected world right now. I happen to, of the three, I own all three of them, but I would prefer the euro, I think, and perhaps with the yen second, because there are many technical reasons that I'm optimistic about the yen. But currencies are very difficult these days because everybody is printing money, everybody's debasing the currencies, and we're going to have a lot more currency turmoil over the next 2 or 3 years because of the huge imbalances that exist in the world.
Right. Well, Woon-Kim, would you agree to that? Because there seems to be a lot of disappointment in the markets about the BOJ's easing measures. I mean, what does the BOJ need to do next? Ultimately, do lots of bond buying?
Yes, that was the idea, because it was a little bit convoluted exactly what they could and would do, because the whole push on them to expand the QE was to weaken the Japanese yen. But so what they did was to just flush liquidity on the short end. But then there is another batch of people who's thinking that if you put money in the short end, doesn't really help. You should put money on the long end, which is to buy JGBs, because at least the government with that money can go and do more stimulus spending.
But how much more can the Bank of Japan do? I mean, interest rates are nothing. The debt is gigantic. I mean, what can they do? The market sometimes realizes that the market is smarter than the bank.
Yeah, the thing that they can only do is to hold interest rate down. They can't do it, like you said, it's very difficult to influence the FX market. It's all in the balls.
So 0.1%. Let's get some thoughts and questions from Yusuf in Bahrain as well. Yusuf?
Right, Woon-Kim, it's Yusuf in Bahrain. Now, we saw the dollar Swiss hit a 7-month high. The SNB is adamant that economic uncertainty remains quite high. At the moment, at the current level of the dollar Swiss, would you say it's a good buy? And what's your outlook on that? Perhaps we can get Jim's view on that as well.
Well, I certainly am, on the FX side, not keen to go long dollars at these levels, whether against the euro, maybe only marginally against the yen, just because the BOJ had done something. So it's with dollar yen, it's a very tactical, switches in some very tight ranges. But even then, I don't see it breaking anywhere significantly above, say, like the 92 level. Euro dollar, I think there's much more, significant room.
Right, and also, what's going to happen to the dollar? We've got the jobs report, we've got ISM manufacturing activity. You said you like the yen, you also like the euro. Would you hold on to dollars?
I don't pay too much attention to the things like the jobs reports. I know you have to have something to talk about here on CNBC, but the market is long since factored that into what's happening. You should be worrying about the jobs report next March, next June. That's what you should be worrying about, and it doesn't look as though things are going to be great in the U.S.
Right, and Woon-Kim, for people like us, we still need to pay attention to the dollar. What's going to happen to the dollar after the jobs report in ISM?
I think it's come to a situation where, unlike the BOJ, the Fed still has a little bit of more room for maneuvering, which is that they could go back and increase the quantum of QE, which is what the BOJ had done.
How can they do it? I mean, the Federal Reserve has quadrupled its balance sheet, or tripled its balance sheet, and the world will run out of trees if they print more money.
Well, I think what they could do is that they want to bring the interest rate, the long end rates, to a level that is comfortable to suddenly, wake up the Obama administration and say, let's do some good old fiscal spending, program again. I know it's something like that. It's because if the Americans refuse to take recession, as recession will happen, then they have to have some, solutions of such. If it's not monetary, then it's got to go back to fiscal policy.
Right.
All right, we'll leave it there. Chia Won Kien of RBS.